Hello and welcome to today's webinar entitled World Silver Survey 2020. Your program will begin shortly. To view the presentation in full screen mode, click the F11 button on your keyboard. In the lower right hand of the screen, you will find the Action Center. If you have any questions for the presenter during the webinar, they can be submitted by using the question and answer section in the Action Center. If you experience technical difficulties, contact support by clicking on Technical Support. If you're disconnected from the webinar, you can re-enter the program using the meeting URL provided to you and the email you used to register. At this time, I would like to introduce one of our speakers for today's webinar, Michael Dorenzio. He is currently the Executive Director at the Silver Institute. Michael, the floor is yours.
Thank you. Good morning. As Sean mentioned, my name is Michael Dorenzio, and I am the Executive Director of the Silver Institute. I truly hope you all are well during these challenging times and that your families and colleagues are safe. It's a pleasure for me to welcome you to this morning's webcast on our annual edition of the World Silver Survey, this being the 30th edition. We appreciate your joining us today. In a few moments, Philip Newman, Director at Metals Focus, will be discussing the key findings from this year's survey. Feel free to send any questions you have for Philip, as he will take questions at the end of this presentation. The 2020 edition of the survey was independently researched and compiled by Metals Focus. Through their research and travels, we have access to key information on the silver market from around the globe. This research, however, is only made possible by the financial support of our members and survey contributors who recognize the importance of this work. For the 2020 edition, 18 companies made this publication possible through their support. I'd like to thank them all and our member companies for their generosity. Now I would like to turn to Philip Newman of Metals Focus, who will present to you the summary findings from this year's World Silver Survey, which has just been made available on our website at silverinstitute.org in PDF format at no cost. Philip, I turn it over to you.
Thank you, Mike, and good day, everyone. Just like to add my welcome to Mike's as well, and very importantly to thank, as well as Mike, the major sponsors that are listed on this slide, and also, of course, the sponsors and contributors as well. And as Mike said, without their support of the Silver Institute, then this report simply wouldn't be possible. What I want to do now is to crack on to the main part of the presentation. Firstly, we will look at some of the key developments, both in 2019 and very recently. We'll then look at some of the key areas, the key highlights in global supply and demand for 2019 as well, before finishing with the all-important outlook for 2020. And as Mike said, I'd be delighted to take questions at the end of the slides. So let's really crack on with that. And firstly, a slide or layout that will be familiar to many of you. We've obviously had silver rebounding quite nicely following that sell-off we saw in earlier part of this year. And that, of course, that's something that all of the precious metals faced as we saw the rout in equities and really investors liquidating other assets they held to raise margin, or to meet those margin calls, I should say. The decline in silver was, however, steeper than we saw in gold, with silver therefore falling comfortably, unfortunately, below $13. And that, of course, reflects the far smaller market that we have for silver compared with gold. So, for example, if we look at the value of silver investment, and for that we look at some key indicators, we add the totality of global coin and bar demand for 2019, with ETF holdings end year, with the positioning net managed money futures as well. And that gives you a figure of around $20 billion at N19. And if you compare the similar metrics with gold, you get a figure of around over $220 billion. And that really therefore gives you a sense that when you do have liquidations in silver, it can have a far more pronounced impact. But of course, the flip side of that is that when silver or when gold starts to move higher, and that spills over into silver, you can see silver therefore outperform gold as well. If you move to the next slide, one of the key challenges that we faced for silver was the weakness in the base metals complex. Now, of course, it's all too easy to focus on the substantial weakness that we see here on the right-hand side for 2020, but even before that, in 2019, we saw base metal prices falling. That, of course, as we'll see shortly, had implications for byproduct mine costs for the primary producers. But one of the challenges that silver faces is that it will behave both as a precious metal and it can behave as an industrial metal, given that roughly half of global demand is accounted for by a wide range of industrial applications. And I think investors saw the weakness in base metal prices last year. We of course have to remember the trade war between the US and China, far from resolved, but that of course was certainly in the headlines last year. And we certainly saw a number of investors shorting silver outright. And the outcome of that, therefore, was this relentless march higher in the gold-silver ratio. Even on a spot basis, the ratio was higher. It actually peaked about 127 earlier this year. And of course, it's very easy to focus on that. But I think one of the points that's worth mentioning is we did see the ratio really increasing since around early 2011. And I think that did add to that sense of bearishness principally among, I would say, professional investors, including hedge funds. And that's why we saw at times, both in 18 and 19, the fact that we saw net positioning go to a net short for extended periods of time. We can see how that turned around last year. I think a lot of investors thought that perhaps some of that position was overextended. We saw certainly rotation moving back in favor of precious metals at times, especially in the second half of last year, as you can see with the silver price getting back above $19 as well. And of course, we can see how that positioning has weakened very, very recently. And I think that partly goes back to my earlier point of the fact that we did have investors liquidating their holdings, excuse me, to meet some of those margin calls. And this is, I think, is a very important slide when we think about the outlook. This tells us that one of the conditions for investor positioning to be rebuilt is certainly there, given where not only the relative small positioning of investor holdings, or the net long rather now, compared to even where we were earlier this year or the latter part of 2019. But if we think about the positioning in 2017, and you can just about see that on the far left-hand side of this slide, where we did have net positioning at times, comfortably exceeding 400 million ounces. But what's also important is from a value proposition that the net positioning now is it's well below. It's around, I think, the 6 billion ounce mark, whereas where we saw in 2017 it was over 9 billion ounces, and that does tell us that certainly there is room for positioning to increase should the background and the environment warrant it. But it's certainly not only about positioning on the NYMEX. The ETF side, exchange traded holdings, have certainly performed exceptionally well. And what's interesting with this slide is that this was prepared just about a week ago, And already it's out of date because global holdings has now surpassed 800 million ounces. And in fact, just for the record, we saw a new high set last Friday, so April 17, of almost 805 million ounces, which is about $12 billion or so. From a value point of view, we've already got past that to $13 billion. But that just gives you a sense that just how broad-based the recovery has been in investor positioning. And it's also, I think, important that what the ETF shows you is that the investor base is very broad, because we're not just talking about institutional investors or hedge funds, because from a silver ETF perspective, there's certainly a bias towards smaller investors that have come into the market. And this was certainly a key factor when we looked at this slide and we put together our forecasts for 2020. And some of you may have noticed, if you've had a chance to look at the report from the Silver Institute, is we have a forecast of 120 million ounce positive delta for global ETF this year. So in other words, we've seen already getting through 800 million ounces this year. So we're certainly looking for new highs as we move through 2020. So that really completes, I guess, a cursory view of the market where we are now. What I want to do now is to turn to some of the key areas of global supply and demand. And as you would expect, starting with the most important area on the supply side, mine production. And the way this slide is set up is obviously a waterfall slide showing you the position of 2018 of around 848 million ounces and falling to around the 837 mark in 2019. And just taking a step back, that 1% decline that we saw for 2019 was really the fourth consecutive year of declines, and a number of reasons for that. We had declining grades at large silver mines, and we had lower silver output, principally from copper mines, and also there were some disruption-related losses as well. Contrasting that, we had actually some growth areas. So we had a 2.3% rise, for example, in the lead zinc sector, and as well as silver production from the gold mines was actually unchanged in 2019. From a copper side, from byproduct copper, you had a decline of just over 3%, and actually from primary silver mines, you had a decline of getting on for almost 4% year on year. If we then look at some of the key countries, and again, you can see some of those listed there, most significant from an ounce point of view was a decline in Peru of around 11 million ounces, and that was largely a result of lower head grades at some major silver producing mines, along with some closures. And then, as you can see, we've highlighted the likes of declines in Mexico, and those offset, as you can see, some positive figures for the likes of Argentina, Australia, and the US. So how does that translate into the performance of costs for the primary silver mines? So as you can see here, we saw some quite significant increases, both in total cash costs and all-in sustaining. And the reason why you had such a larger increase in total cash costs is actually you had a similar rise for both in dollar terms. But of course, the total cash cost is a much smaller figure, hence why you have a much larger increase. And there were a number of reasons for that. Principally, you had lower byproduct credits because of the drift or the decline in base metal prices that I touched on earlier. But also we had increased treatment charges for zinc and lead as well. Other factors, which I think are really worth mentioning today, we had increases in some local inflation, a number of jurisdictions, and also lower head grades at some of the larger operations, and that was particularly in Peru and Mexico. But I think in spite of this increase in cost, I think it's very, I think a very important point, and I think quite positive for the industry. And again, we are thinking about 2019 here, that the average silver price was sitting at around the 90th percentile. And that I would suggest, or speaking to our mining team, is that current production levels were certainly supported by the price. Of course, when we think ahead to this year, the further and more material weakness in base metal prices, and of course, unfortunately, some mines, having to temporarily close because of the lockdown, we would suggest that will certainly push costs higher. Of course, there'll be some offset. We have a far higher gold price, and we are expecting gold prices to rise, and we'll come to that more in the price outlook at the end. And then, of course, very recently, we think about the collapse in the oil price and how that will feed through into diesel being used on site as well. But I think overall, net, we do expect costs to rise this year. Turning to the demand side, and industrial offtake was essentially unchanged for the full year. But I would say that a key takeaway from our point of view is the fact that we had the third year of global offtake in industrial applications, holding at around the 500 million ounce mark. And that certainly reflects the diverse uses of silver across a whole range of industrial applications. And we're just going to touch on a couple of those in today's presentation. Of course, I'd encourage you to look at the chapter in the silver survey, also obviously ask me some questions afterwards about some of the other areas. Unsurprisingly, looking first at the photovoltaic or the solar cell market, we saw a recovery last year, getting back to around almost 100 million ounce mark. And I think even allowing for the decline in 2018, you can see just how elevated the total has been for the last 4 years. You have different dynamics playing out here. You certainly have thrifting continuing. It may not look that substantial from the index line that we show on this chart. And it's not that the delta year to year isn't that substantial, but it's certainly a factor that I think remains in play in the marketplace. But I think what's really important, and this is certainly a point I made in the interim presentation when I was in New York in November, which seems like a very long time ago now. And what was very important for the PV market is the increasing diversity in terms of the countries that are installing new capacity. If you go back 10 or 15 years, it was certainly dominated by Europe. Then China came to the fore, but now we have the likes of India, the Middle East, and a whole range of other jurisdictions. And in fact, even Europe has become more important in this area as well recently. And I think that certainly is an important area. So, even if, over the next year or so, and you'll see it from our forecast, we're expecting a decline, understandably, this year. I think in terms of, if one takes a step back, it still remains, I think, a healthy picture in absolute terms, in terms of ounces being consumed in this area. If I now look at the next area I wanted to touch briefly on, and that's in the light vehicle market. And of course, we've seen declines in global production over the past couple of years. But again, we are still remaining at close to record highs, or at least in 2019, in terms of production figures. And a point we've made, again, I made this at the interim back in the fall of last year, is the increasing complexity of vehicles, in terms, especially those going onto the mass market. You only have to look at the wide range of electronic components in your car compared to even just a couple of years ago to see how complex they're becoming. And I think it'd be too simple to say that every element requires silver, but a large proportion certainly do. And so we are seeing, therefore, and we've certainly seen this, that silver demand has been outpacing the general trend in automotive and in light vehicle sales. And I think once we move past the current crisis, we would suggest that trend will certainly continue. Just changing tack slightly, but staying with the industrial space, I just wanted to highlight a couple of countries, Japan and China. And this slide is still only looking at industrial offtake. And I think what's interesting is the growth that we've seen in China. The delta you can see from Japan certainly reflected issues, I think, more on the photovoltaic side. There were some temporary losses there, but overall the picture I think is very healthy in Japan. What we see in China is, and this is only reflecting fabrication in China, in other words, where there's a first transformation of silver. It's also an important importer of paste as well. In other words, we're looking at a total here of around the 120 million ounce mark for its fabrication, whereas its consumption is considerably higher, given the volume of paste that are imported principally, but not only, but largely for the PV, the photovoltaic market. And it's also important to remember that China is still the largest assembler of finished cells. But what we've seen, of course, and it doesn't really come across in this slide, but it's still very important, because of the trade war last year, we're certainly seeing companies looking at their sourcing of finished and semi-finished products, looking at whether they should be taken from China, thinking about increasing the number of suppliers that they deal with. And that's certainly something that we've seen that dynamic playing out to the benefit, for example, of Korea. That could be something that can benefit India as well. And there's certainly these changing dynamics across in key markets. And I think from that point of view, that's where it helps in terms of the key people that we have as a company across South and East Asia. So moving away from the industrial space and looking at the jewellery industry, this again is incredibly important in terms of its dependence on India, which is shown by the red bar near the bottom. And although we certainly saw weakness in the Indian market last year, and there were a number of reasons for that, we saw the impact of a slowing economy. There were certainly erratic monsoons that the country had to face, and there was a sort of a deepening liquidity crunch over parts of the country, and that affected people's ability to really buy silver and silverware that we'll come to in a moment as well. And in fact, what was really interesting is that, as you can see globally here, you had a decline of about just 1%. But again, against a very high total in 2018. I think sometimes as analysts can get too caught up in the year-on-year changes, whereas in absolute terms, I think the picture was still very healthy. But if one excludes India from this picture, then the global total would have been actually been up 1% rather than just slipping back very slightly. And I think, again, it's always important to look at other markets as well. If we move away from jewellery and then touch on silverware, you can see the dependence on India is even greater. And again, yes, we had, excuse me, a double-digit decline last year for the global total, but again, a record high again for 2018. Excluding India, there was certainly still weakness, but the weakness, I believe, gives you about a 7% decline or so, maybe even smaller for 2019 versus 18, against a more pronounced impact that we see because of what was going on in India. And of course, for this year, you know, with the lockdowns in India taking place at least until the 3rd of May, that will certainly have a pronounced impact on the market there. But we'll come back more in the outlook. The last element I want to touch on in terms of the core areas of supply and demand is in the coin and bar. Now, of course, this only goes up to 2019, and we are focusing only on the US market. What's important when we take a step back and think about global physical demand for silver, so we think about coin and bars, the other key market here is, of course, India. But here we're just focusing on the US for the purposes of this presentation. And just one public proxy on the coin side, of course, as a company, we're looking at, we speak to the other mints, so we know what the other mints are shipping into the US. We try to get an idea what's happening on the bar market and a 1 ounce round as well. But we do think this is a reasonable proxy for activity. There, of course, have been issues of on the supply chain in the US, but I think if you speak to dealers, they will tell you that the market has certainly been struggling. And not just for silver. Gold has also been hit as well in the States last year and the year before. And I think, that does reflect a couple of trends. You've had, for an extended period, price this year again, range-bound prices, and that was set against, record high equities. And so that made it, I think, quite a tough argument for retail investors to rotate in favor of precious metals. And we've also put on here COMEX inventories, which have been rising, and they did hit a record high at the end of 2019. Now, the weakness in the Eagle sales is only one factor for that, of course. But I think it is quite indicative or illustrative of that trend that we did see rising stocks. Not only on COMEX, we saw an increase in Vault holdings in London as well. And I think at the current time, they are around the 1.2 billion ounce mark. So we did see those holdings edge up about 2% last year against end 18. And I think that's no surprise when we bring all of this research together and we look at the overall position in terms of the surplus that we see. Now, of course, the surplus was, yes, it increased slightly year on year, but taking a step back, it's obviously far lower than we saw back in 2016 and 17. Having said that, if you look at the period since 2010, one gets a sense of that increase in above ground bullion stocks that this surplus has contributed to. Hence why, that's reflected in, as I just said, in rising COMEX stocks and rising LBMA stocks as well. So that completes, I would say, the sort of the 30,000 foot view of where we saw the market last year. I just want to touch briefly on 2020, and as I said, very happy to then take questions. So, unsurprisingly, we're looking at supply easing back this year. That certainly reflects the impact of the disruptions. And I think it's important to bear in mind that we didn't try and crystal ball gaze tremendously on what the disruptions would look like on the supply side. We looked at what was being reported as we went to press, and therefore that did include the declines in the likes of in Mexico and Peru, and also, of course, in Quebec, which has since we've gone to press, of course, those mines have been deemed essential, and we are looking at those reopening. But again, it was very difficult to predict that, so we just, as I said, had to call it as we saw it at the time. And so that's, again, why we see supply declining again this year. That will, though, be more than offset by weakness on the fabrication side of the market, or weakness in the industrial demand. The decline may look quite modest compared to 2019, but we were pre-crisis, or pre-COVID crisis, we were starting with a higher expectation for 2020, and therefore that would give you a much bigger delta in terms of our expectation for 2020 versus where we finished up in terms of the current forecast. Now, what we're trying to obviously take account here is how supply chains will react. Of course, they're exceptionally disruptive, as you know, as all of you will know. There is obviously tremendous uncertainty out there, and even though we are seeing the likes of China getting back to work, I think it's safe to assume that companies will look to run down stocks where possible. There may be a shift to more in time, if that is possible, allowing for the disruption to trade routes. And I think that will have a knock-on impact. What that does suggest, though, is that you can sketch out a scenario of a larger bounce back in 2021 from where we are or where we expect to be this year. And that weakness in the likes of industrial, I touched on jewellery and silverware, both of those being affected not only by weakness in India, but of course by the US as well. That is offsetting a ramp up in the coin and bar side. And many of you, of course, will have read reports of apparent shortages. And I think it's important to try and get across that, we have shortages of investment products in certain jurisdictions, which is very different from saying there's a shortage of silver. As I've already touched on, you just have to look at where we are on COMEX and the likes of the London vaults as well, to get a sense of how significant silver is. And in fact, if I just briefly step back to the end of last year, if we include holdings or vaulted stocks in China, so we're thinking of the Shanghai Gold Exchange and the Shanghai Futures Exchange, so those four jurisdictions with London and COMEX together, you had silver holdings of around 1.7 billion ounces of silver. So again, I think it's important to try and put that into perspective. So in terms of the market, we've certainly seen the US ramp up, shortages of products, of course, for silver, gold, and platinum, premiums, as many of us know, shooting up. You speak to some of the mints, they'll tell you about extended ordering times, smaller allocations for dealers in a whole range of jurisdictions as well. But I think it is important to try and understand that, we are looking at also the impact of those transport disruptions as well, and trying to put all that together. But having said that, we see the ramp up in the ETF holdings, and as I said, we're certainly seeing a ramp up in coin and bar demand. More so, I would say, in North America and Europe and parts of East Asia as well. As I said, it's very difficult in the likes of India, given the lockdown that we have there. It will be very interesting to see once India opens, how the market will react. Will we see buying shoot up, or will that be an opportunity for investors to liquidate their holdings? You can certainly sketch out a scenario of a very active two-way market developing in India. And so because you are having a situation of the weakness in demand, in spite of that improved coin and bar situation, offsetting the expected decline in mine production, you're still having a smaller surplus. Now, I think a surplus, and of course this figure will change as we go through the year. And at Metals Focus, we're very happy to continue conversations beyond this as we move through this year to see how our views change. So please do feel free to reach out to me or my colleagues later this year if that's of interest. But at this point in time, we have a relatively small surplus. And I think when you have a surplus of below 20 million ounces, you're almost getting to a point of a balanced market, broadly speaking. Having said that, you're not having stock depletion. And so at the margin, this is also weighing, or is one of the factors that will impact the silver price. But it's by far the most, not the most important. And I think far more important will be the macro backdrop that we have. And so if you have an environment of negative or almost zero interest rates, which aren't about to change anytime soon, you have an environment where effectively quantitative easing is, will continue as well, not only in the US, but other key jurisdictions. And so therefore, the opportunity cost of holding precious metals or holding gold and silver is therefore exceptionally low. And you add to that the immensely uncertain economic outlook. Now, we could have a scenario, though, of another steep fall in equities. And so I think that would certainly feed through into weaker gold and silver prices. But that, I think, would be very much a short-term development. And I think then that would give way into a further rotation in favor of precious metals. And that's why we do think that gold and silver will continue to strengthen, not only this year, but also, I think, into 2021 as well. And then you combine that, of course, if you remember one of the early slides where I showed you how relatively low positioning currently is on the COMEX, as shown by the CFTC data. I do think you have the conditions there for prices to strengthen. And so we end up with this scenario. And what we're looking at, just so you're clear on this slide, the left-hand side is showing you the price moving on a spot basis, so it's a history. And then we're showing the forecast by the horizontal lines, which is a quarterly average for those periods. And so if you looked at the silver survey, we're looking at a high for the back end of this year of around the $19 level, but that's why that doesn't show on this chart, because it is quarterly averages. Now, of course, silver is exceptionally volatile. It can obviously comfortably move, significantly just within a single day. So therefore, exceptionally difficult to predict. But I think the key takeaway, I guess there are two or three here. We do expect prices to strengthen, as I've already said, but the fact that the economic outlook is so challenging, I think that will weigh on silver, and therefore its ability to outperform gold will be constrained. And so even with the high of $19, the back end of 2020, we still expect the gold-silver ratio to hold at around the the 90 level, if maybe a fraction higher as well. So that, therefore, is an exceptionally high gold-silver ratio, which I said is we marry with a price of around $19. So that, I guess, completes the whirlwind of the market. Very happy to take questions. I think Mike will field, but also, as I said, please feel free to reach out to myself and Mike afterwards as well.
Okay, thank you very much, Philip. Great presentation, and I hope you all enjoyed it on the call. We do have some questions. Philip, how will the collapse in the oil price impact PV demand?
That's a very good question, because one of the challenges for the PV market, as you know, is the relative cost of generating energy in PV versus fossil fuels. And of course, with the oil price doing what it's doing, that introduces, I think, a competitive disadvantage clearly for PV. I think, though, there's a couple of things. I think there will still be a commitment by many governments to their green energy targets. And so I think that argues well for the industry. And I also don't think I wouldn't extrapolate, on a longer term basis from where we are now in terms of the energy price going forward. So I think we will see, therefore, I think the longer term outlook, I think, is quite positive for the demand, for still PV demand. I do think, though, for this year, what you will see is, governments, I think, clearly have higher priorities than spending money on PV projects. And that tells us that you will have some of these delayed, whether it's at the back end of this year or into 2021. I think that almost is a given.
Very good. Thank you. Another question. With silver and gold having very different fundamentals, is the silver to gold ratio relevant in analysis of the silver market?
That's a fair question. That's true, because if you think about the clear fundamentals, so leaving aside investment demand, as I touched upon earlier, about half of global demand for silver is industrial applications, whereas for gold, it's certainly dominated by jewelry. And the other key element is for gold, it's most demand is far more price sensitive, be it on the jewelry or the coin and bar side, much more than it is for industrial demand, at least in the short term. I think it still is relevant. I would say that when the ratio gets so elevated, I hear that, well, that's a reason why silver should outperform gold. And I would disagree with that. I think you've got to have the reasons why investors would want to allocate in favor of silver. So the gold-silver ratio is one indicator. There are certainly investors that would look at that and think it's a value play, and that would encourage them to come in. Conversely, there are other investors that would look at the gold price, say, responding to safe haven demand, look at the silver not responding as quickly historically over the past few years, and then that will be a reason to, either not come into silver or to short it. So it can work both ways. But I think it certainly still has a role to play, yes.
Okay. Thank you very much. We have another one. 1 second here. Philip, ETF holdings, as you mentioned, have hit new highs, with global holdings crossing over the 800 million ounce mark. Should the market be concerned about this overhang?
I would say no. I would suggest no. That's why I think we were, when we looked at this, and I think it's important not to simply extrapolate from the positive Q1 figure for our full year. It was certainly an element that we looked at, but it was certainly not a reason to sort of have a straight line increase, for want of a better phrase. As I think I touched on earlier, from a silver ETF standpoint, you have a bias towards retail holdings, and that's not the case for gold, when there's much more sort of high net worth and institutional investors. And so if you think back to 2013, when you had the washout in prices and the massive liquidations in gold ETFs, you didn't really see that in silver. And I think that tells us, and we've certainly seen it over the years, broadly speaking, that ETF holdings, because it's much more dominated by retail investors, is certainly much stickier. And so we also therefore think that as we move through this year, we think that investors will respond to that and will add to their holdings. Will there be periods of selling? Of course there will be. Do we think it will be significant? At this point in time, we don't know. So we would regard this, the growth in ETFs, as generally a positive development. We obviously watch it very closely, but at this point in time, no, we wouldn't regard it as an overhang, or an overhang to be necessarily concerned about.
Very good. We have a few more here. With
Sure.
China and others targeting investment in the 5G rollout, how much of a boost will this area provide for silver demand ahead?
That's a good question. That's something we're certainly looking at. I would say that 5G itself, I think the demand will be relatively modest in terms of the infrastructure that requires, but I think the second order benefits will be much more significant. In other words, you think about the services that 5G facilitates in terms of that much faster bandwidth, to put it crudely, or in my layman's terms that I can understand. And I think just what that allows and what that facilitates, there'll be certainly a second order impact in terms of installs and services being developed, and also just the what that means for new consumer devices as well. So I think that's why it's certainly a very positive development, and we certainly see that both for silver and gold. Even if from gold the industrial offtake is far, far smaller, it is certainly a positive element for both metals. Okay.
Philip, is the decrease in Peru's production expected to maintain at this current level, or are there any possibilities of recovery?
So I just missed the beginning. Is a decrease in which production, Mike?
Peru's mine production.
Oh, I see. I don't think that necessarily will is a long-term development. In fact, what I would suggest is that's something I would come back to later, and perhaps I can touch on that with our mining team. So, Mike, if you know who sent that question, maybe you could forward that on, and I can send a much more detailed reply, not only what we think of for 2020, but because as a research house we produce a 5-year view, I think as a one-off basis, I'm very happy to give a longer-term view of Peru for whoever's asking that question.
Okay, terrific. I can do so. And let's see here. I think that comes to the conclusion of the Q&A. So with that, Philip, thank you so much. Thanks to your entire team. Thanks to all the attendees today. Thanks to the members of the Silver Institute and to our sponsors. We wish we could have done this live, and we certainly plan on doing that next year in New York and in Mexico. So with that, I'd like to conclude today's call. And once again, thank everyone. Thank you.